give us a sense. We saw the rally have a bit of a pause yesterday. Right now, futures kind of a mixed picture right now. What's your outlook for the day ahead?
Yeah, I wouldn't be surprised to see the rally that we've had throughout November start to fizzle as we turn our attention to what the Fed is going to say in a couple weeks at the December meeting. I think it's really important to the Fed that they pour as much cold water as possible onto the excitement that we've been feeling and onto the expectation that we're going to have rate cuts at some point next year. And so I would look to the December meeting to be quite hawkish, and that's going to spell a little bit of a sell-off, or at least trending sideways for the market the rest of the year.
All right, so you're seeing some pressure ahead potentially for the market. With that in mind, I want to focus back on today. What is your WEX word of the day and why?
Yeah, so kind of going against what I just said, I think, but my WEX word of the day is impressed, as in I've been thoroughly impressed by the market's ability to sustain this surprise rally throughout November. We're up something like 9%, I think, to this point so far this month. And the markets were really starting to sour in September and especially in October, where Treasury yields were spiking, investors seemed to be going away from stocks. And then suddenly we find ourselves watching most of the Magnificent Seven catch fire once again this month.
So it sounds like you're impressed by big tech, pretty much. I mean, you just mentioned the Magnificent Seven. I want to ask you something. Looking at earnings season, EPS up 7% higher year over year. But when you really look at it, it's tech and communication services really the driving force. Tech earnings up 15%, communication services up 46%. Do you see that ability to continue to grow earnings continuing into Q4 and even 2024?
So I do think that tech is a little bit unique in the sense that operating margins are pretty fat, right? So if you just consider what other sectors require in order to turn a profit, tech doesn't really have the same overhead challenges. They don't really manufacture anything. If I ship software to one person, it doesn't cost me very much incrementally to ship that same software to another user. And so tech is always going to look good from an EPS perspective as long as the rest of the market has any potential to be positive. And so it's not a surprise that you would see tech being the leader once again. And I imagine for the next 12 plus months, we could see, again, a sustained bullishness in tech. But I do think we'll get a little bit of a rotation away from some of the Magnificent Seven names that have led us through 2023.
You know, speaking of, you're looking at a mega cap tech name that's outside of that Magnificent Seven. It's also an AI play. It's Adobe. Earnings coming up in just about, what, 2 weeks from now. Why is this a good stock to buy right now in your mind?
Yeah, so Adobe, of the names as we're talking about that are at all-time highs, once again, all of the names currently trading well. Adobe is one that I believe could go higher from here, irrespective of whether we're in the middle of a bull market or about to tip into a bear market tomorrow. And that's because of their ability to lean into AI in the creator space instead of running away from it, right? They've embraced it and it's paid off well for them this year. And so in hindsight, they happen to debut Firefly, AI at the perfect right time, where as we're starting to hear authors make more noise, photographers are making more noise about where they're learning that these big tech companies have used their work to train their AI models. Adobe owns a lot of the content that it uses for these generative AI tools that the co-pilots, for example, that allows it to create different art. And so it's going to become more and more valuable as the treasure trove of creative that they own.
Adobe's your pick. I want to bounce one other thing off you. We're expecting a 5% increase in sales over the Cyber Monday holiday. We're going to get that number tomorrow. What does that tell you? Does that give you any sense about the direction of the market?
Not so much. I think we always expect Black Friday, Cyber Monday to do pretty well here in the States, at least. And so I think it's probably just a little bit more of that same knee-jerk reaction. We're following the same playbook that has guided us in years past, but I wouldn't read too much into it as far as what that means for the rest of this year and turning into next year.